At Real Vision, we're closing the doors. But not how you might think. You see, this autumn we're launching the new Real Vision, a platform built around the universal truth that knowledge times tools times network equals success, your success. It's the biggest transformation in our history and brings together everything you need in your journey, from information to knowledge to wisdom, all in one place. That's incredible AI, charting tools, networking, economic data, watch lists, notes, and a whole ton more. We start rolling out to our current members at the end of August, and from August the 15th, we're closing the doors to any new members while we focus on that. But you do have one final chance to get in that door. Until August the 15th, you can level up for a whole quarter of Real Vision just for the price of $20.14. When you go to realvision.com/last chance, you'll see why we chose that price in particular. It's something about Real Vision of old. You'll get to experience the new platform before the general public with no obligation to stay after that 3 months, and a price that works out for like $6 a month. It's what you call a no-brainer. Anyway, I hope to see you on Real Vision. It's an incredible community, and my God, this new platform is going to be extraordinary and will change as many lives as possible.
Is a September rate hike off the table? Hi, everyone. Welcome to the Real Vision Daily Briefing. With me today is Dale Pinkert, trading coach at TradeGateHub. Hi, Dale. It's great to see you.
Good to be back. Always a highlight, Maggie. Good to see you.
Well, coming into today, it looked like the inflation data was going to be the big story, what we're going to be talking about. And CPI came in pretty much as expected on a monthly basis, a tick lower on the year over year. And that initially did help stocks rally and treasury yields move lower. But we had a auction of 30-year bonds that did not go well in the afternoon. They sold at the highest yield since 2011, and much of it went to primary dealers, not investors, which is interpreted as a sign of weak demand. And that put upward pressure on treasury yields. Looks like stocks are going to hang on in the green, but well off their highs. What do you make of the market action today, Dale?
Well, I brought a TLT chart, Maggie. They want to pop it up there. I talked about that there was a confirmed low on the weekly TLT chart back in October. And the best TLT did was basically work over a bond crash, work off the oversold nature of it by just moving sideways. And I was willing to give them a chance to turn good over 104, and they were rejected. And then we had this new funding package. So, markets rarely bottom when a low is confirmed by momentum, like it is here with the RSI. So I think new lows are destiny. I think you'll have to get used to hearing more about poor auctions, and I think there's a possibility for a target under 90, maybe around 88, 86. Next stop for TLT, higher
Yeah.
yield.
Yeah, exactly. When you're talking about lower, you're talking about the price. Yields
Right.
move inversely, so higher price. So what do you think? I don't want to simplify it by saying how bad could this be, but what do you think that upward march of yields looks like? I mean, do they creep higher? Is this because we've got a lot of Treasury has to issue a lot
Yeah, I
of
think we'll
bonds.
waterfall from here. We
Yeah,
broke down.
exactly.
So, it could look pretty ugly, get from point A to point B in an impulsive manner, as Elliott Wave would ter categorize it, because it doesn't mess around. And so, this could be a bit of a shock with what's happening. I've said people have been wrong-footed about rates, looking for the pivot, and they're gonna be disappointed. I think your lead was, will the Fed hike rates again in September? Of course they will. Okay,
You
and
think so? Because the market took down those odds after CPI today.
sure they did. And the market's looking at stats. And, I want to share with you and your viewers that I think there's a bigger agenda than just economic data. That's kind of the kabuki dance that all analysts are doing. And I think that what's happening with our banks, let me ask you, Maggie, you feel as comfortable with big deposits in your bank? We used to be able to
I don't
just.
have any big deposits.
All right. Well, I knew you were going to say that it was a setup line. Okay, anything.
Yeah. Well,
People
listen,
used to
isn't
feel comfortable with their life savings there,
right.
Maggie. They didn't have to think about, well, maybe I should transfer it because there might be a failure. I've never believed this was over. I believe in a way it's being engineered by the Fed. Okay. Otherwise, why did they focus on two economic areas that had structural shortages like labor and like housing? And once they have the inflation numbers going their way, now it's growth. Was that their mandate when they started tightening, or was it inflation? So the biggest story out there, Maggie, and no one talks about it, and I just have to, is really the biggest monetary story of the last half a century or longer is the coming of the CBDC. And you know what? Americans are not going to just want to go to another
Central bank
system.
digital currency.
That's right. Uh, reporters used to ask the Fed, well, the dollar's weak. What do you think of the dollar? And whatever the Fed official was, Greenspan, whoever it was, that's not our purview. That's the Treasury. Well, this eliminates the Treasury. The Fed becomes the Treasury with the CBDC. And Americans aren't that, maybe people all over the world really don't like to make changes unless there's enough fear and uncertainty that it looks like it could be a fix or a solution. So this banking crisis is far from over. If you thought things, and this is, I said this before Fitch, before Moody's, and people are going, well, Fitch, Moody's, that's old news. They're way behind the times. So if they're behind the times, the bank's positions on duration is not getting better with bonds cratering again.
Yes. I mean, it's a major problem. So the other problem, of course, aside, you mentioned confidence, but the issue has been what, Bianco and many term the bank walk, which is why would you have it sitting in a savings account when you can have a short-term T-bill or money market that's yielding a lot more? So wouldn't the Fed raising rates just worsen the banking system? Or you're
Yeah,
saying that that's their intention?
by their design. So there'll be less banks, and they have a few allies working the deal with them, like JP Morgan, where they'll be, they're gobbling them up at bargain basement prices when there's failures. So, yes, I think that this is by design so that people lose confidence in our banking system, and the CBDC eventually rides to the rescue, um, because maybe at that stage the dollar's in a lot of trouble, or we're going to have banking problems and bank holidays, and CBDCs are going to be the solution, and people are going to have a lot of fear, and they'll be willing, just like after 9/11, we'll give up our rights if you keep us safe, right? Well,
Wow.
the Patriot Act, right?
This is a very do you think the Fed is, capable of that sort of planning? I mean, we think they can't even engineer a soft landing, and if you talk to most people, they think they've sort of, they're pretty ineffectual at monetary
Yeah.
policy. Do you think they'll be able to pull
Well,
off something which sounds a bit
well,
conspiratorial, Dale?
yeah, I guess it does, Maggie. But
No, I'm interested in it.
yeah,
I'm not
yeah, I
criticizing.
know
I'm
it.
just
I know it does sound that way,
mm,
but I don't think you have to be a genius to tighten the economy into oblivion. Paul knows what the balance sheets were before he started tightening, because they were all buying duration based upon, the Fed said you'll be okay, we'll be okay with that, and they took all that duration risk. So he knows that they were vulnerable. And also, wasn't the theory that once something breaks, they would stop? Well, didn't something break in March? And have
yeah.
they stopped?
Well, that's the debate, right? Because some people think, well, it didn't run through the whole system. They were able to ring fence it, so therefore maybe it was seen as manageable and not actually breaking something.
Well, there are more failures recently,
Yeah.
right?
Well, they're
One
more
big
on
one in,
downgrade, right?
well, failures in California, a big bank in California. So I think that there's going to be more failures. And, you could even see from the charts, it's not just the regional banks. I brought Citicorp which is a money center bank.
Yeah, let's put that
And the
up. What are you
chart
looking at there?
and the charts don't look any better on the money center bank. And a pretty smart guy named Jamie Dimon said that he thinks the Fed should take another look at their models. So we've had this huge market rally, uh, May, June, July. And what did Citicorp do? Nothing. On the verge of breaking down. It wouldn't take much for it to see last October's lows. And, the regionals look worse. And there are some that have better patterns, maybe Wells, but uh, Jamie Dimon's worried about what the regulators might be doing. In an interview, he brought it up that it could be a problem for banks what the regulators want to do with capital requirements, et cetera.
Mm.
So I think the system is being pressed to the edge, and I think that we're going to see really one of the worst banking problems that we've seen in my lifetime. I mean, bigger than the S&L crisis in the 80s, and probably as big or bigger than the Great Financial Crisis.
And sort of in departure with maybe the group think out there, if that were to happen, because when people mention that, they think that will usher in rate cuts from the Fed, but you don't.
I think that, yeah, once once we've broken the system, of course, and the dollar will be the uh, what do you call it, sacrificial lamb. So
Mm.
they will, but we're not there yet. I still think the dollar has room to run. Last time I was here with Ash, it was at the bottom of the dollar at about 99 and a half. If you put the dollar chart up there, I told viewers that if you weren't like me, that like to try and catch a falling knife, all you had to do was wait for the market to negate the breakdown that it had. So here comes the chart. So you see that big thick line down there. And the little red dot is when I was on
Mhm.
and made the bullish dollar call. And I said, if you don't want to, I was suspecting at that time there was going to be a false breakdown. People were talking 85 in the dollar index. I said, wait until it closes back above there. That'd be a breakdown failure. Buy it. And if you did that, you had no drawdown. You kind of had a weak number today, and the market's just too bearish a dollar here, Maggie. And I don't,
Interesting.
yeah, it's still too bearish. And, I think maybe 108 ought to cleanse some of the bearishness in the dollar. So I'm still buying breaks in the dollar.
So and this is a short-term view you have, right? What's
Could
the
last
time
into the
horizon
fall,
to the fall?
maybe year end, probably the fall. So I think that some of this crisis, and I think part of it is going to be risk off. People going to the dollar. You could look at the DAX; it's peaked. Last time someone said, Dale, what would you do with the Nikkei? Nikkei's peaked.
Mm.
Um, European markets actually peaked before us, and they led the way up. So we're peaking now, in my view. Last time on, I said 4,600 is the bear's last stand. Well, they made a stand, and a lot of people will be buying breaks all the way down because it was one hell of a rally, and so every break's going to be a buying opportunity. Um, and when I was on with Ash as well, if you bring up either the Apple or Nvidia chart, um, I said to short Nvidia, it was near 380. And one of the reasons was it wasn't making new highs with the rest of the market. And, what leads you on the way up will lead you on the way down. A month ago, I said I'm looking for a gap fill. So that's still quite a ways from where we are. I think that gap is filled at 320, 280. If you bring up the Apple chart, I was premature in Apple uh, early in the summer, late spring. I was shorting it at 170 and then again in the mid 180s, and it didn't feel good at 197. But look how Apple on its earnings gapped the 50-day moving average. That's a pretty powerful signal. I would say, a lot of people talk about, well, it'll fill the gap. Not for a year or two.
Mm.
So, don't I wouldn't be trading this looking for a gap fill on Apple. Last 3 days after a $20 break, all it could do is hold. So I think the market is not in at least a break to 4,200 in the S&Ps. I think is reasonable. That's where the battleground may be. That's where the big move started from when everything started going parabolic. So bonds will be part of that story. A higher dollar will be part of that story.
Yeah. So let's someone commenting that you sound pretty bearish, Dale. So let's unpack each of those because
Okay.
we kind of went through all those charts. So let's do the dollar because we had Vincent on yesterday. And for those of you who didn't join us through the second half, we talked a lot about the dollar and international. And he was sort of talking in a much longer time frame. I want to really make that distinction because Dale is talking next 3 months, maybe through the end of the year here, thinking the dollar's moving higher. Vincent's taking a much longer look at this, sort of, I would even say over the course of the next decade. So probably moves within that
Wow.
band, but sounding feeling like it's sort of the end of the dollar's run. Let's have a listen and then we'll talk on the other side.
Okay.
I think we had this very strong dollar cycle. And now because of the mechanism I was describing, because of rising twin deficits, because of kind of nationalism when it comes to currency reserves and people no longer feeling so comfortable investing in U.S. Treasuries. I think we have a tenure of a weaker dollar, of a weakening dollar, which would boost pretty much be a rising tide for the rest of the world.
And again, that was from the back half of the program. If you want access to all of our content, scan the QR code or hit the link in the chat and jump on the anniversary trial that we are offering right now. So, Dale, do you worry longer term? Do you see the dollar moving around, but in a channel that's moving lower? Or do you not ascribe to the fact that, facing the sort of the deficits and international investors perhaps repatriating money, losing appetite, uh, that the dollar's kind of in this new stage where it's going to move lower?
No, I agree with him, but the art of the business is not an if, it's the when.
Yeah.
So if I said, within the next year, I think this is going to happen, I'm sure giving, people that are following me a lot of time to go broke. Okay. And myself. So I agree with him. In fact, I agree with him strongly, but I think it happens from higher levels. I think the dollar could be, long-term targets could be in the 50s because I think
Wow.
the dollar will be the sacrificial lamb for trying to reinvigorate the economy. Okay, because if the dollar's going down, everything is going up in at least nominal terms. So
Mhm.
it could make things look okay, but they're not real returns. They're, say, for example, maybe the market recovers 30% when the dollar does this because the dollar's down 30%. Okay. So I agree with him. I just believe now there's just too many people believing it. They're too heavily positioned on the short side of the dollar. Most people aren't bearish the stock market, which is fine with me. I don't want to have company at this point. Everyone's saying it's just going to be a correction. That's fine with me too. And people will buy breaks. I see 4,200 bounce, 3,800 bounce, 3,000, and it's over.
Wow, you have
And
a
then you could get
target.
and
You
then you
think the
could get
S&P can
long.
get to 3,000?
Yeah, by the year end first quarter.
Wow, that's some we're that suggests we are in for some seriously turbulent waters.
Yeah, I think that we're going to see spikes in the VIX. I think that we're going to have a little bit of a financial crisis. How can you not have a financial crisis with problems and outflows from the bank and liquidity problems that do not get any better with rates still going up? You're just pressuring things that were already under pressure.
Right. So higher rates leading to a banking crisis is what you think the catalyst will be for that.
Yeah, yeah, sovereign. Except, I mean, you could look at something like, and a lot of people can't explain it to me. The default spreads haven't blown out yet, but if you look at HYG, which is junk,
Mhm. High
it
yields
looks like
high
a
yields
yeah, it looks
bonds.
like a completely different chart. It's constructive compared to sovereigns, which TLT are a proxy of.
Mm.
Even compared to uh, AAA corporate, LQD, junk. People have more confidence in junk being repaid than they do in grade A investment corporates and US sovereigns. That's got to be a statement in itself.
Yeah, which is hard to imagine because listen, if you
Look at
you
the
don't have
charts.
confidence in treasuries and high grade corporates, you gotta have a problem in junk too. I'm not sure. I
Well,
guess you
I
just
said
get
right
paid
now
for it. I
yeah,
guess you just get paid for it.
yeah, it could be the last domino to fall, but they've junk's been performing while sovereigns have been getting hammered. So
So
something's out. You're probably right. Junk will eventually catch up when people realize the no recession. We may not have the typical recession. We're only going to have a financial crisis.
oof. So, boy, I would have rolled up with a beverage here if I knew we were in for this, Dale. But I
All right,
love
well,
it. I love the sort of honesty and straight
it'll
talk.
be
So
over. I mean, the majority of the pain and liquidation will be over by the first quarter next year.
so
And
it's
so it's
fast.
so important right now that people have a war chest and they build it up
Mm.
so that if I'm right and everything gets cheap, including gold, maybe trading under 1800, and silver. The last time I was here, if you have the silver chart, put that up, please. The silver squeeze guys they had their pom poms out. Okay, here we go, 200 silver. We're on our yippee and that little red circle is where I said sell silver. I still think you'll see 20, and it's part of a liquidity event or a credit event that's going to take everything down. So silver, I think we'll see the 20 handle. Gold, we may even see a trade under the 1800 handle. And then I'm a buyer. And that may be when the dollar rally is over by the fall.
So, Colin, I think that answers your question about gold, and Dale's timing on that. I want to uh Trillion X asking about the bear steepening. When will the 10-year break above 5? I just want to read you something.
End of the
We
year.
talked end of the year.
Yeah, it'll go to 5.
So
There might
it's
be a
interesting.
pullback on a risk off. You might get yields to drop for, a few weeks during a big risk. If we had a crash day or something like that, people will go to the notes. But I don't think this cycle ends. I think we will see 4.9, 5%.
Wow. So you agree with Vincent, who yesterday, I just want to recap something he said because I was looking over it, and he said, on the long end, I still think this is delusional. I think we can go to 5 very easily, and I actually think we could get there in a couple of days. I don't know when it's going to hit, but when it hits, it's going to feel like the gilt market, which we know
Yeah,
is like same kind of
yeah,
thing.
we were on together during that crisis. That's when the pound bottomed.
Right.
I made another dollar call down there.
So
So
you feel
yeah,
like things are liquidity and market conditions are bad enough that if you
yeah.
were to see some kind of crisis, it may get to 5 by the end of the year, but you're not ruling out the possibility we could see a rapid spike there if there is some sort of
I'm
shock
not
to the market.
rolling out if there's a shock and we have like a 10% down day in the market,
Mm.
that people won't run to treasuries and that they'll get a pop. But I think their ultimate destination is TLT under 90, 88, 86, and the 10-year 4.95%.
And that will be driven by the fact that the Fed's gonna keep rates higher for longer or keep
Yeah,
raising and
and even
or that the auctions are going poorly, and so
yeah,
rates are
no,
gonna stay high regardless
yeah,
of what the Fed.
supply. We've talked about this. Supply rates can go up without economic strength because there's too much supply and no demand. And they could also justify it by, have you seen any unions go on strike? They've all won contracts with nice raises.
Yeah, I heard
Okay,
the most Googled search the other day was jobs at UPS
okay.
on word
Um,
of the Teamster the preliminary agreement with the Teamsters because it
he
was
could
such a big rate.
rationalize continuing to tighten because he's worried about a wage price spiral.
Mm.
That's a terminology brought out of the 70s. He could, you know, bring that back out there.
John asking Dale, what about the BRICS currency on top of the CBDC worries? I assume that reduces demand for U.S. Treasuries.
Yeah, I'm really not familiar. I've asked people that I've talked to what they know about it, and is it going to be a trading instrument? And I'm still in the dark about
Mm.
this currency. My
Well, you're not
hope
the
is,
only one. I
yeah,
think there's a lot of there are a lot of hopes and dreams, but the actual,
yeah.
realities of a rollout, I think some of those details remain
My hope is the Chinese only launch a currency on August 22nd. Okay,
only as
so the,
opposed to.
and anything else.
Mm. What time, John asking what
Have I cheered
timeline
you up today?
you do. Just information is power. Information is
Uh,
power, Dale, and we like to
anyway,
look under rocks and consider all possibilities,
yeah.
so that we're ready. So,
I came from under a rock, so that's good.
John asking, what timeline do you have for a banking crisis to happen? Are you worried about this being imminent, or could this kind of bubble along? And we never know. The problem with these events is that we don't have a lot of notice about for them. So,
Yeah, I think it happens slowly and then all of a sudden. I think we're already in the slowly part.
mm,
I think it
uh,
could happen this fall, winter.
well, yeah, when we least expect it, John is probably. Uh, Another question, could you see SPY retrace to the 2007 top 1600? The breakout from that range was never retested.
God, that I'm not that bearish.
Thank goodness. So
But
so
I've thought about that. So, John, I've thought about that double top. You're right. That was a big deal. Never came close, not during COVID or anything. So, I'm kind of looking for a retrace to the pre-COVID highs.
mm,
So, I mean, that won't be the end of the world.
mm.
CBDCs will be, though, in my
Some
opinion, are freedoms.
somebody somebody also commenting in the chat that they are not sure the Fed could pull something like that off. So we shall see.
Pull what
Just
off?
like orchestrating, participating in orchestrating a break of the system that would create enough willingness to make the switch, kind of pull one
Okay.
over on the
Well,
American
I
public.
don't know why they don't believe it because they did it in '08. Was contained. They were tightening. They started easing too late. They did it in 2000. They did it in 1937. So
Well,
they're
they
smart
make
guys.
yeah, they make policy blunders, but that
Okay.
this would be an indication that this is intentional, right? That this is an
Right.
intention.
Right.
Yeah.
Okay.
Um, Dale, so
I'm giving
given
them more credit than being
yeah.
stupid. Yeah.
Oh,
That they're smart guys.
uh, and by the way, you're not the only one who said sometimes we are sort of underestimating them. So you are bearish treasuries, you're bearish stocks, particularly it sounds like tech stocks.
Yes, they
Are
led
there
the way
any
up.
equities that you're constructive on, or is it across the board, or
No,
are you most worried
yeah,
about
even
that?
oil. Oil's peaking up here today. Everyone's got very excited about this breakout in oil over the I don't know 75 level. We got up to 80. I think we'll pull back to 75. If that doesn't hold, I think oil could you know go to 60, 55. And
Mm,
that's been one of the groups holding the market up. some of the stocks that there will be stocks that won't make new lows with the S&Ps, like Meta. I mean, there are certain stocks that will retrace and give up a lot of the gains that they've had since last October, but put in higher lows. And those are the ones you're going to want to buy next year. So, have a wish list for Christmas of everything you want to buy. Maybe you'll be able to buy Nvidia at $200. And you never thought that would have happened when it was 480. You missed it. The AI boat went without you. So this is a great time to get prepped. So I'm not just talking gloom and doom. I'm saying preserve your capital in case I'm right. Okay, don't go all cash, but have cash that in case we do have this liquidity credit event and things sell off dramatically, you could go in and buy things when there's real value in them instead
Yeah,
of when they're overvalued.
which a lot of people are looking for. I got to squeeze one more quick question in for Max, one of our faves. What's Dale thinking about dollar yen?
As long as yields are going up, I tried to short US dollar yen a few times. I thought that we'd have some safe haven buying. It looks like 148, 149 we're going to go to, and we'll see if the BOJ has to come in again. So it didn't work. I tried to short the yen. That was the one thing I brought up last month that didn't play out.
Mm.
So I'm wrong. There are many times I'm wrong.
As many times every trader's wrong. You just got to get more
Yeah.
right than wrong, right? That's what we're trying
Yeah.
for.
Well,
All right,
everything
keep your
else I
powder
was
dry. Watch out.
I
Watch
was
out
right.
above and keep your powder dry. That's the message I'm taking away, Dale.
Yeah, or be tactically short and not with all your money. And it's nice to make some money on the downside. It gives you more buying power at the lows.
Fantastic stuff. Dale, you dropped a lot of knowledge on us. We're gonna let it sink in and see how everybody feels. But this was a super interesting conversation. We love it. Thank you so
And
much.
remember this, the apple chart. Remember this. One bad apple don't spoil the whole bunch. Girl, Donny Osmond.
Donny
1960.
Osmond. You could have had to name that tune. I don't think anybody was gonna get that.
Well, you have to be a young guy like me to remember one bad apple don't spoil the whole bunch, girl. All right?
I love it. We're gonna have to somebody find that video clip. Dale, thank you so much. A
All
lot of
right,
people are
Maggie.
happy you left us with a little tune. We appreciate
All
you.
right.
Thanks so much. Reminder
Take
to
it easy.
everyone, Friday's daily briefing, summer daily briefing still in effect up until Labor Day here. So 1 p.m. and Raul's doing an AMA before that. So we've got a lot coming at you. Be sure to join us. In the meantime, take care and good luck out there.
At Real Vision, we're closing the doors. But not how you might think. You see, this autumn we're launching the new Real Vision, a platform built around the universal truth that knowledge times tools times network equals success, your success. It's the biggest transformation in our history and brings together everything you need in your journey, from information to knowledge to wisdom, all in one place. That's incredible AI, charting tools, networking, economic data, watch lists, notes, and a whole ton more. We start rolling out to our current members at the end of August, and from August the 15th, we're closing the doors to any new members while we focus on that. But you do have one final chance to get in that door. Until August the 15th, you can level up for a whole quarter of Real Vision just for the price of $20.14. When you go to realvision.com/last chance, you'll see why we chose that price in particular. It's something about Real Vision of old. You'll get to experience the new platform before the general public with no obligation to stay after that 3 months and a price that works out for like $6 a month. It's what you call a no-brainer. Anyway, I hope to see you on Real Vision. It's an incredible community, and my God, this new platform is going to be extraordinary and will change as many lives as possible.